Hello, everybody. All right, today we got uh, an index, the New York Stock Exchange, the NYA ticker, and we're gonna go through an index today. And after that, tomorrow I'll do Toronto Stock Exchange, and the after that Nasdaq. I just wanted to see where we're at with the index, and back in the days when I started trading, well, I wasn't doing it exactly the way I'm doing it now, or not at all. When I really started, things started changing is when after I read the Stan Weinstein book, Profiting in the Bull and Bear Markets. And I finished reading that just like a few months or maybe 1 month before the crash of 2008. And that alone, I was able to identify stage 3 breakdown at that moment. And I just went full steam ahead, shorting the market at that moment. I was just going crazy. The risk management, and money protocols weren't too much there back then. Stan, if you remember, it was a buy at over a resistance breakout above the 30-week moving average, and after that you'd move on your sell stops down after each pullback, and then move back towards the intended target. Well, there was no intended target. It could go on forever until you were triggered out because of your sell stops. You moved them up. Anyways, a little light on the risk and money management back then, or not at all. Miracle. I'm still here today with capital and being able to talk about it. And just a miracle, right? It's the hardest thing right now is to learn about those... learn about risk and money management. It seems complicated, but it's very simple. All you have to do is give your time, just learn the basic concepts, and after that, just apply it. And after that, you're set to go for a long and adventurous career path in trading. All right. Meanwhile, I've been trying to zoom back. Right now, I have monthly candles, May 2004. And this is way back. And then we see the start of the top formation and bring us to this candle, which is a candle for August 2008. Let's just see how this happened. Here's the resistance that was attained. And then on the monthly candle, see, there was like a gap down, which is very rare on monthly candle, and we could drill down the weekly just a little later to see how that worked out. So you could have even been back there. I don't know if I could have played it, but that's the first move we have, is a breakdown from this pattern to here and giving us target reach. You would have reached your target. But based on monthly candle breakouts, candles, I couldn't have played this. So anyways, this has morphed, this sideways action pattern, this range, new candle, and now you're defining a new range, a new pattern. And I would have, right now, if I'd look at that, we're closer to I know there's always two possible moves, upwards or downwards. But since we're closer to the breakdown line, I'll just look at that for now. I would have no issue looking at the upwards move if the candles were close to the breakout line, the resistance. Right now we're here. And okay, let's see what happened the next month. Time moves on. Whoa, price action goes up, no problem. Oh, okay, right here. Bam. Breakdown candle. And now we'd have an entry here, short, sell stop above the wick of this candle, and measured move all the way down here. Wow. Okay, so that's and it coincides with breakout levels that we had back here. And yeah, I've just noticed like targets which give me A++ setups or targets which coincide with or don't go through hard resistance or hard what I call walls. A wall is in this case this is resistance turn support, and that support will hinder my path to my target. So these walls, if I have a target, let's say, I don't know, I would have misdrawn my lines, and for some reason my target would be here. Always look back and say, something may be wrong in the way I drew my chart, or if I didn't misidentify the classical chart, then maybe it's not a A++ setup. I'm just giving myself the most chances of reaching my possible target. So right now, okay, breakdown, we're in. Time to short like crazy. No, it's not true. You're only going to short 1% or 2% of your NAV max. And down you go. Oh, bam! Okay, so already like 3 months later, this candle target attained, and you're out of the crisis. So right now, you're going to be on the sidelines in September. What's that candle? September of 2008. And that's it. You're out. And then crazy candle, and you say, why didn't I stay? Well, that's just the way it is. You're not there. And a few months later, all right. So here seems to be a drawing of some support and resistance now maybe here. There's 2 candles that didn't close above that. And let's see what happened. Oh, is this a breakout? Maybe. Let's just add the measured move from the width top to bottom. Would have entered here, sell stop here, target here. It's under previous support turn resistance, so there's not too much congestion on the way there. And what happened after that? And no, 1, 2, 3, there you go. So that pattern, 4 months later, we're out. I always forgot to check RSI. I like checking RSI from tops or to that region just to see if I had some bearish divergence, and I didn't. Lower high, no bearish divergence. We could still consider A++ setup. The range is not super long, but if the risk reward is there, it could have been played. And all right, so we had to wait 5-6 months for this, and then we're in, and then we're out 3 months later, and we're on the sidelines. Moving on, time goes by. Maybe a small launching pattern here. Breakout. If I measure the move, the target would have been reached. Moving on. Some more sideways action. All right, so this is it's morphing. And resistance seems to be at this level, 7,500, and support more at this 64.77 level. And this is a new pattern that we're going to look into play, which has been in 1, 2, 3, 4, 5, 6, 7, 8 months in the works. Oh, breakout. All right, let me add those, the measured move, top to bottom. And there we go. Would have maybe the risk reward not super duper, because the risk is the candle, right? We're in here, sell stop here, and we can only gain about the same height going up, so it's a 1-to-1 risk to reward ratio. Not super duper. I look for 2-to-1 or 3-to-1, even better. All right, let's move on. And through what you're in, 2 months later, target reach, back on the sidelines. All right, sideways action here. Have some candles and the support. So we'll see if there's a few more candles for support. There wasn't a lot here of candles that closed on the support line. It was hard for me to have played that. And okay, that was a retrace. I forgot about all this action. Because monthly candle is different, right? You're more macro, like you're higher up, like a bird looking down. And all this, if I would have been in the news after the crash, everybody was intense. Is it going to rebound? Even mom and pop who had their retirement money, they were talking about it. So it was really like in your eyes and a lot of noise, a lot of people talking. And it's hard. Your brain has to process that, but it still registers that. And your subconscious has to deal with it. It's information you have to deal with. It's a lot of stuff, right? If you're having trouble with that, the best I could say is disconnect. Go off the grid. Don't look at your phone. Don't look at tickers. Don't look at the news. And just do your technical charts in your corner. And just see the ticker. Don't even click on the description. Don't even care what ticker, what it is, A, B, C, D. And just try it. Do it that way. And you'll be clearer in your decision making, and you'll respect more your rules, your classical charting rules, your risk and money management rules. Way easier if you disconnect from the grid. All right, so here's a pattern forming. Maybe here there was a little bottom breakout, 4 months in the making. I'm not sure if I would have played that. That was a risk to reward. Let's move the candle, top to bottom. All right, so these are like intermediate moves within maybe a larger pattern that's tracing out. And let's see if that would have been reached. One candle, two candles, and that candle. 2 months later, you're out. You would have reached your target. And let's see if we go test that support, that resistance. Okay, there's stuff tracing out here. Maybe here this looked like the new support line, and maybe here bigger pattern, bigger support line, with the measured move being when I have smaller targets that are closer to the breakout line and encompassed by a bigger target which is further away, which hasn't tested as recently the breakout line. I always try to play the closest target. The smallest pattern is more actual. And I go with that to do my play if I can. If it's if the breakout pattern is on the breakout line of a bigger pattern, that is A++. That's even better, because right now I have a target for this one that has to go through this resistance. If I would have played that, and now in this case it went through. It's going through, but I could have congested, hit some traffic. Not A++. So you see different patterns, a whole bunch of variants on the. It's easy to get lost in the classical charting, or you start not being clear, seeing different. With time, you'll zone in to exactly what you're looking for, what's your criterias, and the best advice I could say is keep it simple. And I know when you're bored, you start looking around, and then it gets complicated. You start adding stuff, testing stuff. Keep it simple. I did all oscillators. I can't remember. I tried everything I got my hands on the web. And it finally got easier for me when I started removing everything and just staying with these lines. Price action, resistance, support, that's as simple as that. That's like human nature. Certain numbers that people, round numbers that people want to sell at, maybe. I don't know. Try not even to think of the reasons why this is the way it is. It just is. It's price, people buying and selling, and all the rest is noise. All right, let's just see if this is a bigger pattern, the furthest target, if that, not A++, but let's see if that would have been reached eventually. See, it goes through previous resistance, so right there at target, I don't like it too much. I would have not liked it because I knew I would have had to bust through that to get to that. So I could have had, it doesn't mean it's not going to reach, but I could have had some sideways congestion here. And these are monthly candles, remember, right? So those are months. And did it go through? It went through like butter. bam. Well, it's a monthly candle. Maybe it took a few of those weeks to hit there, but it broke out. It went back in, and there you go. I would have been triggered out right here. Honestly, sometimes I look at this chart and I don't draw the lines exactly the same way. It's just crazy. And I'm happy my software erases my lines when I exit the chart. I don't know why. And I just have to redraw everything. And that's the practice that I need, I guess, or the fun I have of doing it. Because you have to love doing that. And for me, it's a passion. And I just don't mind doing it. Just go through the motions again. And here we go. Was at a top, small range, add it to here. That candle almost reached a target. And no, it's just a bigger range tracing out. So right now, that's the actual range. Charts morph, one candle added, and bam. Oh, there we go. Is that a breakdown? Well, it did close below the breakdown line. And the only reason we're not in on the monthly candle chart is time has passed by and the target is already reached. So within that same candle, maybe somebody playing on the daily or the weekly could have probably played that pattern. There's more patterns on weeklies, even more on dailies, but more whipsaws also, false signals. And that's why I am on the monthly. Plus, whatever analysis I do on the monthly, it's like valid for 30 days at least until there's a monthly close. Gives me a lot of time to do a whole bunch of other stuff. And I have no stress to do whatsoever. My analysis, you could go back a few months and they're still valid today. If the chart hasn't morphed out of, you just need a little freshening up on the analysis, but usually you're good to go. And here we at. Just gonna try to see the bigger picture. A few candles added, and sometimes I don't look at a chart for a few months, and I just come back after an alert is triggered, and it just completely changed. It's just it's like magic, but not really. All right, and this is tracing out as a nice sideways action for the past 2 years and a half. We have some nice sideways action from the next side. Oh, and there we go. Candle didn't quite make it out. And this little candle here is our breakout candle. Let me add the arrow. I'm going to look at the upward scenario, the bullish one, because that's the one we're dealing with right now. And move that up right there. And all right, let's see what happened from there. Did it have some bearish divergence? No, not from this peak. No, so we're good for the no RSI giving us indication that this is wrong. And boop, 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 boop. It's like that. And the price is right there when the little man goes up the mountain. And there we go. Target reached 1, 2, 3, 4, 5, 6, 7, 8. 8 months later after this 2 year and a half consolidation. And we're out of the stock. So where we are today is, I don't know why this big candle was there. That's where we are today. We're out. We hit our target a few months back. And all we have to do now in the monthly is wait. I could put some alerts and come back to this eventually, just to keep an eye on it. But overall, the New York Stock Exchange is, for me, not playable. I would have been out. My plays would have been done. I would have been triggered out, and I'd be on the sidelines waiting for some further candles and a further pattern to morph, and see after that how it breaks down or breaks up. Nothing to see here right now. RSI going up. There's no divergence, nowhere. I don't see any signals of anything. I'll just wait. All right, guys, that was a long one. Hope you enjoyed it. And NASDAQ and the Toronto Stock Exchange coming to a door near you real soon. All right, bye-bye.